Okay, that should work. Hi everyone, hope you are well. Let me know if everything is functional, and then we'll get going. Nice to see new faces and old, as always. And yes, Happy New Year. I hope everyone had a restful weekend. All that good stuff. Flowery Roider, audio video good? Always, mate. Thank you very much. I'm doing well. Thank you. How are you? Richard, of course. Sheriff. Frank, Dixie, Dumbo. Very nice to see you guys coming back. Cool. I mean, there's no shortage of things to talk about. And of course, Happy New Year to everyone. No shortage of content, so let's get straight into it. First things, of course, thank you to Bybit for sponsoring Technical Roundup and supporting the show. If you'd like to support the channel, make sure to visit their links in the description below. Show them some love. That would be much appreciated. And also, make sure to subscribe to the channel if you haven't already, so you don't miss these sessions, as well as hit the like button on the video to help us in these so-called algorithmic wars. So, thank you for all of that, and let's chat. So, I'm gonna bring up the Coinalyze website, which we've talked about previously. Again, not affiliated, etc. Just a really cool tool. It's got a bunch of data, and I quite like using the futures data section. So in this case, we're going to global charts and liquidations more specifically, and you can see that there have been, just on this Monday, 1.34 billion in market-wide, so all coins, not just Bitcoin, all coins, positions were liquidated. That's a lot, right? And I'm pretty sure you can make it Bitcoin specific as well. So just to see the Bitcoin licks, and that comes out to 912 million, right? So no shortage of people on the wrong side of the market today, and obviously the majority of the licks were in Bitcoin as well. Purely psychologically, it's always interesting to observe how, quite reasonably, right, depending on where that viewpoint was established, during this sort of price action, right, the prevailing theme tends to be that, oh, well, the market, it looks good, it's bullish, we're all-time high, price discovery, etc., but we're a bit overbought, right? Or it needs to pull back, or funding's too high, just a quick pullback, or shake out the greedy longs, all these sorts of narratives come to fruition. Of course, once you actually get a move, and it's quick, it's ugly, it's not easy to trade, right? Especially when it's fueled by liquidations, etc. Really fast, wicky price action. Once that event occurs, those same people tend to, from my observation, shift goalposts a lot of the time from, okay, just a quick dip and I'm super bullish, then they get their dip and they're like, well, there's this, there's that, maybe I should hedge, maybe I should do this, that, etc. I'm not saying that's unreasonable, but just from a trade planning point of view, those things don't always go well together. So if you're bullish and you want to buy a dip, when you get that type of meaningful pullback, you should be acting on it, right? Otherwise, it's just performance theater, and that's what happens a lot, like on Twitter and other platforms, where people know that it's socially acceptable and socially advantageous to be bullish, right? But at the same time, they don't want to just buy a breakout, buy the top, or buy a parabolic price action, whatever. So it just ends up creating this, I don't know, circus or illusion where market's bullish. Okay, that's good, but I need a dip. Market dips, yeah, market's bullish, but that dip wasn't enough. And you see this ever-shifting target as to what do you actually need to trigger a trade. So just watch out for that type of cognitive dissonance, I suppose. Or I suppose the simple way of saying it, if you were so bullish, you'd basically be buying the dip in one form or another. So that's just something to look out for. If we talk about the chart right now, so the weekly close was fine, and at the moment, as crazy as it may seem given how volatile it's been this week, I kind of have to avoid coming to strong conclusions from higher time frames, because for the time being, this is just like an inside week, right? So we had this last week of price action, we had previous week's high and previous week's low, at least on the Bitcoin dollar pair, and that's kind of what we're trading within for the time being, right? Obviously, you can see preceding weeks had strong breakouts, closed above previous week's high, closed above previous week's high, and also finding support there, etc. You know, that sort of price action. But for the time being, there's not really much to read into the weekly chart, which isn't terribly surprising given it's the first day of the week. So yes, crazy volatility, and as the title suggests, and maybe as not terribly surprising given the amount of liquidations, but the biggest pullback we've had since the March crash in kind of notional percentage terms, whatever, all of that type of stuff. So yeah, weekly chart is the weekly chart, right? I know, great wisdom. Let me see. I mean, look, on the daily time frame, in a very similar vein, if I just add my levels for the time being, there's not like a whole lot to work with right now. I think most of the benefit is going to be derived from slightly lower time frames, or if price kind of moves away in this area. There are a couple of interesting, and we will talk about trade ideas as well as my own trades kind of earlier today, that type of stuff. But just to provide some context, so we have previous day's high and previous day's low as my kind of reasonable anchor points for the market. And then this liquidation, essentially, or the move down, for me, landed at something significant, which was the monthly and yearly open. Now, a lot of the time, these levels aren't necessarily important for the market, but I tend to believe that when we're in this type of price action and this type of area, especially in the absence of historical levels to use as more reliable anchors or reference points, levels which aren't as good just kind of tend to work better, right? So even if in a normal market, when you're kind of spoiled for choice for a bunch of levels, structures, etc., you might not give that much weight or precedence to these opens or whatever else. When the market is essentially starved for reference points, right? Where's support, where's resistance, you kind of have to make do with what you've got, be it via these opens or lower time frame levels or consolidations, all the stuff that we talked about. Which is why today, that's what my kind of breakdown target was. I think it was 28k, 29k, I don't even remember the tweet. But because this is kind of the only level I had down here prior to this much deeper 26k level. So this is the first red candle we've had in, like, you know, a week of price action, okay? And the levels which are relevant for our purposes and for the course of this week, previous day's high, previous day's low, and then this nearest support, barring some sort of bearish continuation, essentially, is the monthly and yearly open closer to 29k or thereabouts. Now, this is the lower time frames is where things get slightly interesting. You can kind of see how these levels come into play as well. So, for those wondering, that, you know, I tweeted my entry, exit, whatever. Just felt like I don't do it all the time, but sometimes it's just entirely subjective and discretionary. The basic idea, and if we, you know, replay mode this so we can go backwards before the fun happened, so to speak. The basic idea was that number go up, and when number go up, I want to buy support. In the absence of really good levels, a lot of the time, as you'll recall, we have to use these, well, we don't have to, but again, it's that same thing. What are you going to use as support if the market's not going to give you the best levels in the world? We have to adapt, adjust, make do with what's available, right? So again, this impulse, consolidate, impulse type of structure, that consolidation tends to be decent, or at least a useful point of reference. And that's kind of what I had in this cluster here, right? We had the impulsive move through 30k, consolidated, and then set another high at 35k. So that, for me, was technically significant. And again, yes, I've drawn the whole box, but it's typically the upper boundary and the lower boundary, the levels, which are significant, right? And especially, and knowing that previous day's low is also kind of in that area, right? So some higher time frame confluence, although not amazing. My basic idea was, because this kind of counts as the bottom of the range, right? That's kind of all a cluster is. Whenever, in most cases, when you see like this type of structure or people drawing boxes, it's just a range, right? Price action had an impulsive move. It was less impulsive, and then it was impulsive again, one way or another. And the price action, which kind of occurs within it, is your range, right? And so within that, within that compressed price action, you've got resistance at the top, support at the bottom, more or less, right? So basic idea, this is the range low, and I bought a range low. Fine, okay, this is fairly unambiguous in terms of its trade logic, whatever. Now, I like to trade where there's space, and I like to trade close to invalidation. So the basic idea was support to hold, because uptrend and target-wise, I mean, I was looking for some intraday stuff, to be completely honest with you. But if we're being, like, with the benefit of hindsight, the first trouble area, I mean, yes, it's the top of the range here, lowest close to highest close. But given I'm trading in tandem with the higher time frame trend, because the higher time frames looked good, I was pretty much looking for some sort of breakout above previous day's high, or basically the top that we'd formed as an objective, right? Now, obviously, what happened was, I mean, it was good and bad, right? So the bad thing is, I didn't see that as a negative. Is that, you know, the trade wasn't a winner. I had to scratch it for basically my fees, right? That's what I mean by a scratch. When I say a trade is a scratch, it's basically exiting near my entry price, but it's not kind of, oh, stop and profit type of crap, because you have to pay for the privilege, or at least I did, to exit at market, right? And so I this is a really important point on trade management. When your long entry starts to look like a short, or when your short entry starts to look like a long, it's probably a good time to get the fuck out of the market, right? So my exit ended up being within here, right? When my entry was, so again, the idea was for this to happen, and I got the close below the level, and when this retest happened, I got out the way before this wick. Like, for me, I'm really happy with that, right? I know statistically a big part of my edge is that even when I lose, I'm really good at mitigating those losses. So you'll see, like, in my trading journal and stuff, it's quite rarely the case that even if I'm on a losing streak, that it's kind of -1R, 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 like these full-size losses back to back to back, right? You'll see for the most part that it's, you know, I'll take 0.5 and then maybe 0.3, etc. So I basically get more bang for my buck, if you will. Whereas, you know, it'll take 2, 3, maybe more trades for me to take that full 1R loss. Whereas if you're very stubborn with trade management and you're like, okay, well, I'm in the market, this is my stop, or whatever, you know, whatever, this is my stop, and if I'm wrong, I'm wrong, that kind of shit adds up really quickly. And there is a video on my channel on trade management, which I strongly recommend watching, because it kind of goes into my whole framework for managing trades. Also, it's quite funny, I always caution against this, but I still get DMs when I post this sort of stuff, and someone said, oh, well, you're long, I shorted your long exit, thanks very much. Which is always funny, right? Because I'm like on the wrong side of the market fighting for my teeth to get like a fantastic exit. Meanwhile, someone takes my exit, you know, clicks one button and basically catches this move within the span of a few candles. I mean, that's it's like bittersweet, right? It's bittersweet. So that's the very boring part of my trades today. Tried to buy a dip to support. It looked like it flipped my level, so I got out and narrowly avoided the nuke. I mean, good enough, right? So where is the market right now, given these levels and reference points, etc.? I'm more or less comfortable using this daily range, so previous day's high and previous day's low, to inform my trading. So the two things that I'm kind of looking for, right? And again, I'm still mostly level to level, so bear that in mind. But within this framework, right, we've had this, you know, huge amount of liquidations, you know, very corrective price action, etc. Good buying near the lows, and that hasn't been stuffed yet, despite the S&P itself looking kind of shitty. So a couple things on my mind. One would be, and this is kind of the aggressive one, trading back within previous day's low. I would see that as a range low reclaim and look to take that at least to mid-range, if not the top of the range, right? That would be good proof to me that we've put in some sort of interim, at least low on this bounce. This is the first trouble area where the market is now. So a break of FTA after this high time frame test of support, I think it's a good chance we'll trade back within these daily parameters. And within that, the trouble areas are around the midpoint and then the top of the range, right? So that's something I'm slightly conscious of. So something which looks like this, more or less. The slightly more conservative version of that, or the later entry, is to use the good old kind of market structure stuff. So we had this impulsive leg down, right, which kind of nuked the preceding consolidation, and we sort of work backwards, right? Where did it come from? Well, we've got this leg up, and then this leg down, right? So we take that entire consolidation, again being conservative, something like this, and say that, this is resistance, this is supply, this is whatever, some sort of sticking point or resistance structure. So if the market is to rally, the only way I would long or unhedge or whatever's appropriate for you, I'm not hedged, by the way, if that means anything to anyone. I basically didn't participate in this bit of price action here. And for me, as you can tell, if I've got good levels here, and arguably back within the range where the market is right now, isn't a place where I'm going to be making strong decisions with regard to my positioning, right? But anyway, the more conservative bullish scenario, if the daily range low and high kind of aren't enough, which is fine, is to basically take a market structure perspective on it, that we've had lower highs and lower lows on the intraday timeframes, right? High, low, lower high, lower low, arguably lower high, etc., etc. So if the FTA break at previous day's low isn't adequate for those purposes, waiting for a market structure style reversal still is reasonable, right? And what that would look like is obviously some sort of higher high through this area, which finds support should it pull back. And at that point, you've both broken market structure or presented some sort of reversal pattern with the higher high after the lower low, which is good. But also, by definition, if we're trading within this cluster or above it, etc., we're back within previous day's low and the daily range as well. So that will be certainly positive. I'm personally not too keen on selling into this or fading this unless I get something really good on a scalp. I can see some sort of reaction at previous day's low given the price action we've had at the level. Specifically, we've had the close above and close below type of pattern, and you'll know from previous videos, whenever you get that failed reclaim attempt, I usually get some sort of reaction at the level itself. But for me, the higher conviction type of stuff is trading back within the range for a kind of A to B sort of setup, right? Or probably something I'd be much more comfortable with is another kind of basically to fill in a lot of this wick here and retest those higher time frame structures. So you get the immediate bounce, right? Nuke, immediate bounce, mean reverting market, hits FTA, and then trickles down to retest the high time frame structure, which for us, as we recall, is the monthly yearly open closer to around 29k. I really like trading do or die levels, as you'll know from my tweets, right? The last 3 directional calls have all been, if the market doesn't bounce here, it dies. And, that's those are areas where I like to transact, so to speak. So for me, this is less of a do or die sort of thing, further away from invalidation, etc. But any sort of retest of this area, 29k more or less, and revisiting this wick, that's an area where I'd like to punt on the long side simply because invalidation would be so close. I think that's all I've got for Bitcoin. So just to provide some context, biggest pullback since March, right? If you're a big bull and you're making arguments for those types of resets and greed, etc., that should be a positive development for you. If it isn't, then I kind of don't know what is. In terms of the technicals, still kind of waiting for the high time frame charts to develop. There's a good chance that the price action to follow ends up being a bit slower and a bit choppier, but that could be completely wrong. God knows if we get another big spot buyer, you know how quickly things tend to move. For me personally, the more compelling setups, until proven otherwise, etc., are going to be bullish ones, right? Given the context we discussed, and those would be located at a retrace to the high time frame bounce zone magical area around 29k, or some sort of momentum continuation back inside the daily range, more specifically above previous day's low. If we even just look at the 4-hour chart, again, this is slightly on the more aggressive side. That same level that I used to long and then used to exit my long before the nuke, I'm assuming it still has some sort of relevance. So I suppose from the magic go-kart school of charting point of view, literally something like that marries those ideas of some sort of reversal inside the daily range, and that would also look good to me. But you can see where we are right now, right? Sort of not an attractive place to trade from as someone who likes structure. I'd rather be trading the bullish side above the red box, right? Or the bullish side into the do or die at 29k. Gun to my head type of bearish scenario, etc. The most I could reasonably come up with is some sort of reaction at previous day's low. Okay, so those three areas. Area number 1, previous day's low and the 4-hour support resistance flip. Area number 2, support, right? Some sort of revisiting, filling in a lot of this wick. I'd probably play for some sort of do or die bounce at 29k. And yeah, we discussed the third one, the kind of higher up market structure reversal play. Okay. Yeah, that's sort of all I've got. It's, you know, some days it looks like there's an easy trade available for the market, and it becomes apparent in hindsight. And if you find yourself on the wrong side of it initially, then you just have to kind of recalibrate and get back into it, so to speak. I prefer strength plays generally to shorting back down. I just want to see it at support or through resistance, not into resistance. Does that make sense? Do you kind of understand both my trade earlier today, my exit, the framework I'm currently using, all that type of stuff? Are there any questions? Also, make sure to like the video if you haven't already. If we get to 100 likes, I'll send you all a wonderful air kiss with your consent, of course. Are US daily closes more important than UK? So the daily close is UTC, right? That's when physically on the chart the daily candle closes at midnight UTC. So the gray box, good question. It's just this hourly market structure level, right? So you had this leg up, which technically led to a lower low, and then it was reclaimed as support, and it's support again. So that gray box is literally this hourly swing, high, lower low, higher high, right? That mark from the market, literally from the market structure video. When you get a high, or whatever, crap, I'm going to confuse myself if I do that. But basically, yeah, lower low, there we go, lower low into a higher high is where that support structure comes from. But again, I think the slightly more important point is that monthly and yearly open level landing thereabouts. And yeah, I will strongly recommend to be very cautious with leverage at these levels, which is why I'm very picky about these setups. And my sizing is literally, I think, almost half of what it normally is. And that included this morning as well. I'd be very cautious up here. I mean, look, even this hourly candle, right? And this is on the spot exchanges. I mean, derivatives, spot went deep, derivatives as well. Let's just take the Coinbase example. This is an hourly candle. From the low to the close of the candle, you've got like almost a 10% range just between the low and close of one hourly candle. I mean, that is insane, right? You've got to be really careful here. And I don't think there's any great impetus to rush setups at this point. If anything, my personal view, despite my how I've drawn these levels, and this can change at a dime, but I'm expecting some shitty price action, to be completely honest with you. I longed in the morning, got pretty much, I think, the best long exit of my life in terms of being wrong, and that's all she wrote for the time being. Roundneck says, what do you think about the Doji wicks as support resistance levels? I think they're fine for the most part, but I generally just don't use wicks for support resistance unless it's something like a previous day's high, previous day's low, etc. I just tend to have better results with candle bodies. So yeah, that's Bitcoin. Hopefully that's clear. If it isn't, let me know. I'll do my best to clarify or whatever. ETH, pretty interesting as well. I mean, this thing went absolutely bananas, right? I think the daily range, the last couple of daily ranges have been insane. So on the breakout through the quarterly level, that was like a 30% day, right? And today, by the time London opened, essentially, you had another like 22% range, I think, at that point. Yeah, I mean, however, I mean, even where we are from the open right now, right? The stuff, we're basically back at the open, but then look at the highs and lows. The volatility has been absolutely insane on this thing. But where does that leave us with ETH? So I've got monthly resistance. It's kind of like the Bitcoin one at 20K, for those of you who remember, except it was on the weekly. It's the all-time high close, right? So we use that for Bitcoin at 19.4, 19.6 or thereabouts. ETH has a similar type of structure just on the monthly at 1.1, right? I think, and so the daily close looks like it's going to be below that level, and I'm kind of starved for levels in between, because I mean ETH obviously didn't come back to retest its quarterly, yearly open, etc. And there are some intraday structures we could reasonably superimpose on this thing to punt lower timeframes. But to be completely honest with you, looking at this 4-hour chart, right? Do I really want to be, if I'm bullish, for example, getting involved in anything kind of here? It's just, it's like an air pocket, right? There's not like a whole lot going on. I don't love these levels. I like to trade at structure, right? So for me, trading at structure would either be back here or through here. So where does that leave us? And we will look at ETH BTC in a moment. Well, I think at the moment, again, I think it's reasonable if you want to add these hourly, etc. levels. I'm personally not going to. I want to see the price action which preceded this move down, right? And so this is the monthly level, and we had an hourly, again, same pattern that we kind of pay attention to, where you get a close above the level, the next candle closes below, right? Close above, close below, clean double close, whatever you want to call it. So for me, this level is still valid resistance, and if we rally into it, I'm expecting some sort of reaction thereabouts. Okay, but to get long this market, it would require either a pullback to some more meaningful structure, close to 750, 730, 7050 thereabouts, or for this bearish setup to fail. Because again, bearish setups that fail are bullish, bullish setups that fail are bearish. At the moment, price came into monthly level, offered this pattern which closes above, closes below, and hasn't come back to retest it yet. So if this current bounce continues, I think that's a reasonable objective for shorter term trading, or at the very least just the base of this candle as the first trouble area. Unless I get some sort of saucy dip, if I want to get long ETH, which we'll discuss in a moment about with regard to ETH BTC, I'm going to need to see some sort of continuation through this monthly level, which again, take the diagrams with a huge bag of salt, will look something like this, or more realistically, perhaps something like this. Okay, but the summary version is 1.1k resistance, probably get some sort of reaction if this bounce takes it for a retest. Clearly breaking that area, I'll look for momentum continuation to get long. In terms of dips in these area, kind of maybe retracing some of this move, etc. I just don't love it. So on the continuation side, break 1.1 meaningfully, and again, I wish I could be very specific with my entry triggers, but my system is just far too discretionary for that type of shit. 1.1 break, likely higher. Dips in between at 900s, not a fan. Only dips I'd be looking to buy would be big nukes into 700 or thereabouts. For really shorter term trading, some sort of scalp reaction, whatever thing in this area is probably reasonable, but it's from a higher time frame point of view, not really the side of the market I want to be playing after this sort of impulse. Okay? Does that make sense? People are mentioning dislikes, but you could always like the video instead, you know, be the good the force of good you want to see in the world. Bro, you have watcher from all over the world. Speak a little slower. I mean, you could just ask if I'm speaking too quickly so I can repeat something. I'd much rather repeat than deliberately slow down. What do you think of the BitConnect chart? I didn't think of the BitConnect chart. How do you use quarterly and yearly levels? Not hugely differently from anything else. I just look at those time frames and draw the pretty much open closes where I think it's relevant to do so. Do you always chart on log? I mean, I use levels, so it doesn't really matter too much. I know trend lines can kind of change around a bit, so I do, yeah. Why not use moving averages for levels? I don't think there's anything wrong with using moving averages for levels. I just don't do it personally. It's not part of my system. Do you use 1 hour close for entry trigger? It depends. It depends. Sometimes, yeah. Like my exit for this position, right? Oh, and this is also the thing which made me uncomfortable in that trade. Looking at Coinbase spot exchanges using that lowest close level, the 4 hour close was below the level, right? But I'm trading derivatives until they get banned in the UK in like 2 days. So I was looking at Bybit's chart, right? And that same 4 hour close actually closed on top of the level. So that was another confounding factor that I wasn't a huge fan of, but kind of had to deal with, right? Disparate data streams. So for me, this is that 4 hour level, and I was managing it on one time frame lower. And this is something you'll see me talk all the time, like monthly, looking at weekly, daily, looking at intraday, etc. In this case, that kind of scales. So the trade idea was based on the 4 hour, but I'm going to look at hourly closes to see what's up. And so this, with the context that Coinbase closed below, this was the close on Bybit, and then this was the trade management candle that closed below, right? And again, if my expectation is this, and then the market starts to look like that, closing below the level and retesting it as resistance, like you can't pay me enough money to stay in that trade. And so that was the exit trigger, this candle here, and luckily got out the way before this type of thing, because I probably would have gotten slipped a pretty non-trivial amount on this sort of move. A very thin leg of price action here. Let's talk about ETH BTC and whether continuing to look for ETH longs makes sense. Something that straight up made me laugh is, also thank you for smashing that like button. Wow, 127. I'm humbled by your contributions to the channel. Anyway, that's cool of you guys. So we had Casual Friday with the Duck, right? And we're discussing ETH and how ETH BTC was underperforming, etc. And obviously you have these couple of days where ETH BTC just goes absolutely mental from the lows, even though we'd mentioned in both cases for us that it was like at support, like proper bottom of the range here, worst place to get bearish, etc. But just commenting on the trend overall. And so this one guy commented being like, great video guys, you know, really appreciate the insights. Just make sure for anyone watching to ignore them when they talk about Ethereum. They've been wrong for the longest time, which kind of made me laugh because it's not entirely wrong. Certainly on the squeeze side of things, or just on the bullish side of things, I haven't been able to capitalize that. My last kind of strong view on ETH was at 400, and was that 400 or 500? I don't even remember, to be honest. Where is that? Yeah, 400. And then once that got invalidated, I was like, okay, well, ETH is going to go up now. And Technical Roundup, etc., has been bullish ETH for a long time. Talked about bullish market structure, you know, talked about bullish market structure within this consolidation, etc. But yeah, that certainly was something that. So maybe do take it with a bag of salt, or a healthy dose of skepticism is what I'm trying to say. But with regard to ETH BTC, right? It's pretty straightforward what I want to see now, because this thing was making lower highs and lower lows, and it closed below probably my favorite level on the chart, which is this weekly swing high here, right? And you can see in the preceding trend, you've got lower highs, lower lows the whole way. Now we have a type of, I mean, it's obviously like at some sort of sticking point. It's, you know, retesting the previous base, etc., etc. So fine. That's where the markets ended up. What I want to see now, and I could even, if I wanted to, just remove all the other levels and pay attention to this. You'll recall from the market structure video, when you have a lower low, right? Low, lower low, and then that results in a higher high, that usually is some good impetus for reversal. So you've got low, high, lower low, expecting bearishness, some sort of lower high. Instead, the market makes a higher high, right? Lower low should be bearish, into higher high is bullish. And so you generally want the high which preceded the lower low to then hold as an area of support to get your reversal template, or some evidence of reversal at least. And I kind of want to see that in ETH BTC here. So you've got kind of lower highs, lower lows this whole way. More specifically, you have this leg up, this leg down. So again, high, which led to a lower low. And now it kind of looks like the weekly close is going to push to make a higher high relative to that most recent swing. So for ETH BTC to make a convincing case for reversal based on the last couple of days of price action, I pretty much want this to hold, this swing high candle. So if we continue to pull back, or ETH continues to underperform, I say continues, I mean look at it, this thing's gone absolutely mental. But basically, for it to keep going, I need my black box to hold this high to act as support. And at that point, I think there's a real window for ETH outperformance. Because again, if we look at levels in ETH BTC, there's that market structure level we talked about that's nearest support. Then there's the top of the range where the market's kind of topped and found resistance. And then if that breaks, then, you know, the floodgates are open for, in my opinion, basically 0.05s, right? So I still think the clearest ETH outperformance window is here, right? Between these two levels, there's like a 50% move there. And that's sort of the period in which I think just alts, Ethereum, and the non-Bitcoin crypto ecosystem goes absolutely apeshit. So this is still my focus from kind of a high time frame, maybe even portfolio rebalancing point of view. But from a lower time frame price action point of view, if these weeks of pump are just going to go absolutely apeshit, I really don't or can't see the black box failing to act as support. If it does, then we have to do the whole, oh, is it like an inverse head and shoulders type of thing, etc. I just don't want to deal with it. The easier route to bullishness and ETH outperformance is from A to B. The tentative one, or how that would kind of has to look for me to be convinced, is A to B and then to C, right? But at the very least, this black box is non-negotiable. So people asking about ETH BTC, looks good, weekly needs to hold this. If it does, fantastic, probably top of the range and then much higher. If it doesn't, then there's a good chance that it basically keeps chopping and stays stuck for the most part and non-trending. So that's I think that's a pretty conservative or straightforward or not terribly burdensome requirement to set on the weekly time frame. So we'll see if that happens. Quickly going over some altcoins as well. So Link USD hasn't really done much, right? Still stuck. I mean, retested our weekly level, so I guess that's something. As before, to be bullish this, and I'm kind of we'll look at the BTC pair and I'll explain why I'm open-minded towards being bullish. Link if altcoins set up appropriately, or that some of the other DeFi stuff has just been far outperforming, right? And if Donald were here, I'm sure he would chastise me for looking at something which has hit its cycle top, etc., etc. But for the most part, weekly resistance, you know, the good old break resistance and enter price discovery, there's probably something on the table there. But for the time being, range high, range low, both being respected, so not a lot to write home about there. For now. Wow, that's a really nice reversal. I missed this reaction entirely, but there's a good chance I wouldn't have traded it anyway. Don doesn't have an alt account. So if we look at Link BTC, right, this is where it gets interesting. We discussed this thing behaves really well technically, moving from level to level, and most curiously, it never kind of fakes you out, right? So if we take the upper boundary, you can see it closes above it, it holds, closes below it, it flips. Like, really clean, right? No double close, go way above it, deviate, any of that stuff. Same thing on the lower side. Holds a support, closes below it, retests it, goes low. I mean, this thing is really good. Now where we've entered is, again, another weekly range. You've got range high here, range low here. It came very close to the range low itself before bouncing, but for the time being, it's still kind of here until proven otherwise. And again, if it rallies into that upper boundary and could even wick some way above it, until I get a weekly close through this type of upper boundary, then I'm not going to be bullish link against Bitcoin, and there's a good chance the USD pair as a result basically stays range bound within those structures we discussed, right? I like to trade at structure, so either reclaim this and there's like a meaningful bounce scenario on the table. I mean, even just against Bitcoin, there's a good 50% there for it to reach FTA, which is kind of sick. Or for price to really slam the bottom of the range, I get my kind of, because it narrowly missed here, right? If I get my do or die type of punt at the bottom of the weekly range, or even if it really overextends through it and then it reclaims, even from a range low to range high, that's another like 50% from clearly defined structures. That's the point I'm trying to get across. Where the market is right now is kind of between levels. It didn't really bounce from the range low and has kind of ended up pretty much slap bang in the middle of the range where it is now, right? I think with how well this trades technically and how clean it is, I've got no reason to rush or trade away from structure. So on the bullish side, either the bang at the bottom of the range, some sort of nuke, deviation, whatever type of do or die setup. I'm sure you're all reasonably familiar with the type of stuff that I'm talking about. At the very least, a weekly close above it if you want to be conservative, right? Or break back above the range high, and there's 50% more or less to be captured from A to B, even if it does end up being a counter trend bounce. On the so-called bearish side of things, if I'm expecting Link to continue to underperform, pretty much, you know, you have resistance, broke above it, should have flipped the support but failed. So for me, this is resistance once again. As always, punting at structure, so that's kind of that would be the range play from A to B. Like when a market is just being nice, right, and it gives you very good levels and respects them accordingly, I just think it's a disservice to yourself to some extent to start taking shitty trades if, as cliched as it sounds, patience is rewarded eventually. So I'm going to wait for it to reach areas where I want to do business and not really stress too much with where the market is right now, especially because we know the USD pair is also range bound. So expecting huge shifts in this in the middle of nowhere probably isn't warranted. It's been, you know, a lot of the altcoins actually held up pretty well, all things considered, on this market slide, which is cool. Don't you think big euphoric moves kind of make short-term market structure irrelevant? No, I don't think big euphoric moves make short-term market structure irrelevant, especially when we're talking about like weekly market structure, like high time frame stuff, which takes a lot of money changing hands to shift. I think if anything, it's very instructive. YFI is I'm so also I usually keep asking what's the next educational vid. It's not going to be a vid, it's the cryptocurrency futures trading guide that I'm writing with Donald and some very talented proofreaders. That's going to take a few weeks. We've seen this chart a million times. It's one of those where it's not going, but it's not dying either, right? Which is interesting. So we have this range low, 22k. We've got this range high, 34k. Typically, when one side gets reclaimed, right, as we even covered theoretically on some of these, one side gets reclaimed, you go towards the other side as an objective. This is how, you know, you've had one test, two test, failed breakdown, and now back above the level again. Yeah, come on, it should really get going now. So it's still on the table, but kind of the longer it takes, especially when other altcoins are ripping through highs and are much more are performing better, it kind of, you know, begs the question, why pay attention here? But purely technically, still fine until proven otherwise. I think the difficulty with YFI is the Bitcoin pair doesn't look great after losing this cluster of support. But saying that, we're kind of reaching near cycle lows for it as well. So there could be something on the table with the confluence of cycle lows in the Bitcoin pair and the USD pair still holding support. So nothing really changed for this. apart from just more time passing, right? And yeah, some of the altcoin, we'll talk about Litecoin, Ripple, and stuff in a moment, but some of the outperformers have been really good. We talked about the Uni $4 break. I'm really surprised and somewhat annoyed that I missed this bit of price action here, because my expectation was that you'd get a close above, right? You get some sort of breakout candle, and then it would go straight to resistance. Instead, I mean, it's not very clear on the daily time frame, but if we look at slightly lower time frames, not the nicest thing in the world, but it did present some pullback to structure and a re-entry opportunity before reaching the top of the range. With where it is right now, it still looks good, to be honest with you. It's one of those things, again, which tends to respect levels, so I'm going to give it the benefit of the doubt until proven otherwise. Using these highest close, lowest close levels for range boundaries has been pretty good. So now it looks like a break and retest of $5. I'd be a bit conservative and kind of delineate the whole consolidation here. So as long as this pre-breakout cluster holds a support, just like we had a range low to range high move here, and a range low to range high move here, this thing kind of just looks like it's following that same technical pattern of stair stepping up. So unless it makes a lower low close, so again, as long as that red box remains intact, I guess I'm just going to assume continuation from A to B. Same thing, get back above one range, go to the boundary of the next. Just as a mandatory disclaimer, using leverage on alts is really, you can get fucked super easily. So just don't do it, or at least know what you're doing if you are. And also, it never hurts, as we've seen with a lot of these that we discussed earlier, to leave stink bids in these markets, or bids or limit orders to buy at much lower prices in case, again, the market kind of sneezes. These things tend to really overextend through the very clear technical levels when the market kind of takes a slide as a whole, as we saw with sushi. And, you know, that there is that risk to some, benefit to others. So purely kind of TA, this holds, go to the other side of the range. More from a trader's insight, that's your kind of technical view, but don't be terribly surprised if circumstances shift and you get some sort of wick much deeper. Generally, if you're trading alts with leverage, I think using like super tight stops or high leverage is risky and pretty difficult to manage. Aave just went up, right? No, that's good. I think this is one of... I should really start leaving limit orders on a lot of these levels we cover in the live streams. Goodness me. My personal view is when you get this type of price discovery, all-time high break, whatever price action, that strategy that we discussed previously of trying to catch some sort of nuke on the bid side when the market as a whole corrects or altcoins suffer because of the volatility of the majors, that's probably going to be it. Purely technically, it's obviously going to be the breakout level is your finest candidate for a support resistance flip. Previous high, break above it, look for it to turn to some sort of previous low. But the same thing applies. One is just being a bit more generous in delineating what that area looks like. So using the whole cluster or consolidation as opposed to a line in the sand, because again, altcoins. And also being cognizant of leaving some sort of, potentially again, if it suits your strategy, and I'm no expert on altcoin stink bids, so take it with a healthy dose of skepticism, but same thing, at least not having no risk of being wiped out if it violates structure a bit more deeply than we'd like, right? Doesn't have to trade perfectly. I think same thing applies to synthetics here. Sushi looks fine still. I mean, it's kind of trend continuation. This is also one of those DeFi ones where you have reasonably well-defined ranges and it kind of starts stair-stepping with them. It's interesting to see Uni and some of these others outperforming Sushi, even though the last sort of 2 to 3 weeks were slightly different. Let me just... Yeah, I mean, I'm kind of okay with this level. I can see the case, and I saw some charts floating around that, oh, you know, big blow off top, reversal candle, etc. for the most part. Like, I don't give that too much weight. this thing's kind of just been breaking out until proven otherwise. Breakout, not neat but flipped. Breakout, not neat but flipped. Breakout, again, not hugely neat and not retested, but I mean, ultimately, it's pretty clear which direction market structure is headed. So this is one of those where I think a similar type of logic applies. The retests on the of broken resistance aren't hugely clean or easy to trade on this pair, but as long as structurally they hold, right, and you don't see just a blatant reversal, then it's fine. And even just market structure, looking at where the lows are coming in, that pattern is also uninterrupted. This is one of those where you've got support. If you want to get involved there, it makes sense. But using market structure as a filter generally is quite good. Up until proven otherwise. Proven otherwise would mean a daily break in market structure, so some sort of lower low through this level. And in terms of what if it dips, well, you've got the breakout level at around 2.8, 2.9 as an area where you'd look for buyers to continue this trend of higher highs and higher lows. Okay, not up here. Again, I'm just not great at trading away from structure, so I won't pretend to. But there is structure under $3 for me personally. Not a huge fan of curve. Doesn't really set up much for me to take a look at. Rune just broke everything, right? So same thing applies with regard to potential nuke bids. Same applies for RSR, right? These breakout levels is generally where you expect support, and if they fail, then that sucks, but that shouldn't be our working assumption. And people ask about DOT. I generally quite like, again, impulse, consolidate, impulse, etc. But in this case, you've got, yeah, okay, fine. You've got nearby, like the closest levels of support is every single, or the closest consolidation. There we go. The closest level of support is the closest consolidation. For me personally, if I were going to join the DOT FOMO train, I'd need to see something more meaningful like this. So for shorter term trading, I think following that type of structure is fine, right? It goes impulse, base, impulse, base, and then you expect those clusters, ranges, periods of consolidations to hold as support. I think if you're like scalping this, which a lot of people are, etc., for shorter term trading, absolutely fine. You know, be my guest. I won't talk in detail about stuff that I'm not going to do, so that's probably the most I'll talk about there. For those looking for something a bit more rounded or higher time frame, or what if the market nukes and I'm looking for discounts, you know, where do I look, etc. The first real meaningful high time frame pullback candidate for me is closer to $6, which is basically the macro breakout. It's one of those that's good to be prepared for, but until supports start to break, same thing, right? Same, just like any other strong trend, up until proven otherwise. As long as you know where proven otherwise is and where the big retest levels are, you're kind of good to go, right? And that's a consideration worth having generally. Like, where's support, like, right now, immediately, in the short term? Like, where's the nearest level of support? And then where is my market's nuked or corrected meaningfully level of support? And I think you need both if you want to trade well. I really do. The first one, with regard to where is the market right now, is a lot of the time, especially in crypto, the trend will be so aggressive that by the time, let's say your level of like, okay, this is a really good high time frame support level, your level's here. By the time you get your pullback into that sort of level, right? So let's say the market, whatever, keeps going, and then eventually makes its way, hopefully not like this, because that looks like a rug pull, but eventually makes its way to your level. Sure, you've got a trade on the table, but then you also probably had some sort of trade here, or like somewhere along the way. There were much easier and just the different, probably easier but slightly different trade setups along the way. And those who are following those lower time frame or less corrective trends have, you know, taken 2, 3, 5, 6, 10 trades along the way, and then this one they lose, unless they're terrible risk managers, they don't really care about because they've made so much along the way, right? So they're taking advantage of the trending conditions. Whereas if you're always waiting for that macro, mega retest, etc., you miss out on easier continuation or more accessible continuation trades, shorter term trades, whatever, on the way up, and then you kind of have to put all your eggs in one basket once you get the bigger corrective price action. And a lot of the time, depending on how the market actually gets there and what it does on the way up, etc., you may have even changed your mind. You might not want to even buy this level after whatever transpires, right? And this is something I kind of had to learn the hard way with Bitcoin. Like, I took some longs on Bitcoin at really terrible levels that I wouldn't trade otherwise, right? So one of them, you'll recall that I punted long, and I think these were tweeted or whatever, not that it makes any fucking difference. I punted long on this level here. Now, is that even support, right? I mean, look at it. I literally looked at the weekly chart and I said, okay, this is a red candle. I'm going to use the lowest close and I'm going to use that as support. And it worked. I obviously exited way earlier, didn't hold out for anything like this. It was like an intraday trade. But like, this level is terrible. Like, if someone came to me with a normal looking chart, right? Maybe just within this price action here. And they said, what do you think of this weekly level? And they drew this line. I'd say, well, it's probably visible or something more meaningful on the lower time frames, but as a weekly level, I mean, fuck me, right? There's there's nothing here. It's a red candle. What do you want me to say, right? Whereas in these sorts of conditions, this is like God's gift to humanity, right? That type of pullback to structure. So it's about recognizing those shifts in condition. And the same thing happened here. That long I took, I think tweeted as well. Again, doesn't make any difference. Anyone can tweet anything. Same logic. And Donald absolutely hated this trade. He was like, he said I wouldn't counter trade it, but I just thought it wouldn't work. And fair enough, I didn't think it would work either. Same thing, right? You have this amazing cluster, consolidation, context, whatever. It breaks out, and this is obviously the better area to do business. But then we had a big red candle here. And then as the market started to pull back, and again, this is below previous day's low when this kind of price action came in, I bought this level. It's a shit level, right? There's nothing to it. It's literally a red candle, possibly even some sort of top-looking reversal shooting star type of candle. But it kind of qualifies as support because it's red and it's the lowest close, right? Absolutely trash. 9 times out of 10, someone shows me this as a daily level. I just disagree completely. But in this type of environment where it's impossible to be wrong and the bid is infinite, you kind of have to adjust your expectations and make do with what you've got. Otherwise, if you're waiting for kind of rounded, bullish retests, etc., you literally have not gotten one ever, right? I mean, arguably, the last one you got, if you keep those high standards, is this level here. But, I mean, look, not exactly flooded with choice, are you? So if the market's being very aggressive, my level selection is very aggressive. If the market's moving slowly and respecting technicals and spending more time at levels, like with a lot of altcoins and some of the other stuff, then I will adjust accordingly as well. But it's important to be able to do both. One is kind of the faster moving, where is support right now, what's good enough right now, so that you can actually participate in the strongly trending periods. And the second one is knowing where those high time frame levels are, so that when you do get some sort of more meaningful correction and those shorter term trend traders end up getting carried out, you can actually be prepared for trading the high time frame chart when the time is right. Otherwise, if you only do, again, what are the pros and cons? If you only do the lower time frame stuff, especially if you're a shitty risk manager, once the high time frame trend shifts or kicks in or does whatever, you get carried out, right? You end up longing every single dip on the way down or selling every single rip on the way up, and that absence of a higher time frame perspective will literally cost you your account, as I've seen in many cases, right? So that's the risk of only trading kind of very granular, shitty, or lower time frame, whatever price action. And of course, as discussed at the beginning, the cost or the risk of only trading your macro, mega, high time frame, very clean pullback is that you by definition miss some of the best performing periods in a market because nothing is good enough. So it's kind of one of those losers can't be choosers sort of things, just far less facetious, I suppose. Does that make sense? Like, does that framework about what constitutes or what's good enough for support resistance, is that understandable at all? We'll look at Litecoin. Honestly, read Technical Roundup tomorrow if you want to. I agree, you need both perspective and Tremoto. See you, Dumbo. So it still looks okay. It still looks okay. I just hate this thing because we have to do it for Technical Roundup a lot because it looks like it always wants to break out, but then nothing really happens. I think as long as this type of thing holds, outperformance is still on the table, right? As long as there are no lower closes on the weekly time frame, I still think some Bitcoin outperformance is available. On the USD pair, gosh, this thing looks good, huh? I suppose the only real argument I can make is that we've had a pretty sizable breakout in this instrument if we're talking key levels through the highest close at 137s. Yeah, you know what? Let's do this. I think recency is really important when looking at things with a shit ton of momentum. So the Litecoin Bitcoin pair looks fine. I wouldn't say it looks good, but I'm just I'm just not a huge fan of how that pair trades generally. Is this a highest close, lowest close? I guess I could add that. This thing seems to really like its swing points, so I'm gonna afford it that courtesy. So for the Litecoin dollar USD pair, okay. I think the support that needs to hold is the now bottom of the range at around 130s, 132 being the bottom side, 137 being the upper boundary, basically the breakout. It goes back to a pretty basic point with regard to technicals. If you have a strongly trending instrument and it breaks out, for the most part, that breakout should hold. Now, there are some exceptions. Well, yes, from a market structure point of view, you know, you've got a high here, you've got a higher high here, and then it pulls back below that level and then comes in and makes a higher low here, for example, and then moons. That's absolutely fine. But I think a lot of people are going to be looking at this, are going to be looking for a momentum point of view. And for faster moving markets, that kind of more prolonged higher low pullback sequence, etc., shouldn't be the primary focus. So for this, if someone's wondering for where are levels, where's Litecoin going, I'm panicking, continuation, support, resistance, etc., I think as long as 130 holds, it still looks fine. From a momentum continuation point of view, where is there space? As you know, I like to ask. I think a break of 170s, that sort of opens up the next leg. Right now, it's closer to resistance or kind of between support and resistance. So from a trading or just decision-making point of view, you know me, I like my do-or-die punts, which would be closer to 130. Or on the continuation front, where is there space? Between 170 and 228. Where is it right now? Support a bit below, resistance a bit above. So from a setup point of view or whatever, potentially this or this on the bullish side. If 130s fail, I probably wouldn't be a huge fan until it reaches this breakout area, whatever cluster, back at 80. Is that helpful? Is that what you're looking for, Dumbo? Does that make sense? Let me know. Nothing looks good against Bitcoin at this moment. Oh no, was it Dixie asking about Litecoin? Sorry, I probably mixed names up there. Okay, I think that's... You know, I don't like to overstay my welcome with these things. If I've got stuff to say, we talk about it, and then I don't pretend to know more than I do. Not that there's much that fits under that category. As always, the videos are replayable. So if any sections about Bitcoin, ETH, those being the main ones are unclear, go rewatch them and leave a comment as well. Or even ask now. I'll try to clarify. Of course, a thank you to Bybit for sponsoring Technical Roundup. We are grateful for their support, and if you'd like to support the show and you enjoy these episodes, make sure to visit their links in the description below. Also, 178 likes for this video. You guys are awesome. Thank you very much for coming out in droves as ever. The newsletter comes out tomorrow. As always, or not as always, as recently, as of recent, the content style, etc. has been changed, so it's really good now. Make sure to check it out. That's all from me. Haven't really slept too much, so apologies if I was a bit off. Hopefully you didn't notice. And yeah, listen, Happy New Year. Let's try to make the most out of a very weird landscape. Let's do our best not to give everything back to the market, which has given so much in such a tough year. And I'll speak to you soon. Take care, and thank you for being here. Bye-bye.